Good morning.
Hello.
Hello.
Hey guys.
Morning,
Hey
guys.
Scott. Hey Scott.
Morning.
Good.
So
What you guys?
we got Dr. Jackson on, got Paul on. There he
Yep.
is. Mike, hi
Howdy.
Mike, how's it going?
Hello guys, how are you?
Julian, good. How you doing?
I'm fine. Thank you.
I'm very excited today. My Yankees take on the Dodgers out in LA today. So
That'll be good.
yeah. Haven't done the World Series since 2009. That's a long time ago.
Would have been better if it was
Yeah.
a Subway Series.
Well, yeah, I think so, but
Oh, definitely. I was at the 2000.
were you?
Absolute incredible atmosphere.
I think it's going to be okay, East Coast, West Coast kind of thing.
Yeah, it will be, but I'd much rather see it in New York.
Well, I was hoping just because then New York would have been the home, well, Yankees would have been the home team, but it is what it is. It's going to be a good series. The Dodgers are good. They're really good.
It's gonna be fun. It's that time of year.
Yeah, I love it. It's fun. And football, college football is going on. And the weather, at least where I live, has been awesome. I know I'm going to pay for it at some point this winter, but right now I'm
Heard
enjoying
me.
it.
Bless you.
Thank you.
Okay,
All right.
I should probably get rolling.
Sounds good.
So I was going to start with good news, and I had it as good news, and then it turned into not so good news. So I'm trying, Paul. I'm trying really hard. And I'll start with the Boeing strike. The 33,000 machinists rejected the proposal in a majority vote. 64% of their members of the International Associated Machinists and Aerospace Workers voted against the contract. That was on Wednesday. So this turn of events is a major blow to Boeing, which was already bleeding cash before the strike stopped production on most profitable planes. New CEO Kelly Ortberg, how would you like to be that guy? Is desperately trying to shore up the company's finances. Less than 24 hours before the vote, Boeing posted a $6 billion loss for the third quarter, its worst earnings report since the pandemic. Stopped all air travel in 2020. The strike could have economic and political implications as Boeing is one of the nation's biggest exporters. So think about GDP and or export reports. In addition, its plane manufacturing operations support an entire ecosystem responsible for 1.6 million jobs, according to the company's estimates. So that's that whole ecosystems of suppliers and secondary suppliers and tertiary suppliers and restaurants across the street from these suppliers and Boeing factories and insurance and everybody that benefits from these people having a paycheck. So we'll see what happens. But again, that can't be good for the economy when you have that many people out. The other thing that came out this week was the Fed's beige book, and the beige book usually was something boring back in the day when I was studying economics. We had to talk about the beige book, but no one ever actually read it. But now we do because it's a report published by the Federal Reserve only 8 times a year, and it summarizes the economic conditions across all 12 Federal Reserve districts. So it's used by the Federal Reserve to assess the overall state of the economy and to inform its monetary policy decisions. So it's typically released a few weeks before the Federal Open Markets Committee meets, which is in a couple of weeks, to set interest rates, so it can significantly factor into the influence of the Fed's decision making. So what did it tell us? Well, it breaks it down, and I put it in the Discord. I put the whole report. You can go look at it under news. But under overall economic activity, on balance, economic activity was little changed in nearly all districts since early September. 2 districts reported modest growth. Most districts reported declining manufacturing activity, which we've talked about before. Reports on consumer spendings were mixed, with some districts noting shifts in the composition of purchases, mostly toward less expensive alternatives. And we've talked about that too. People aren't buying name brands anymore. They're going to Walmart for groceries instead of, Whole Foods, things like that. Housing market activity is generally held up. Inventory continued to expand in much of the nation, and home values largely held steady. Agriculture activity was flat to down modestly, with some crop prices remaining unprofitably low. I can vouch for that because I'm sitting right in the middle of corn country. Energy activity was unchanged or down modestly, and lower energy prices reportedly compress producer margins. Under labor markets, on balance, employment increased slightly during this reporting period, with more than half of the districts reporting slight or modest growth and remaining districts reporting little or no change. Demand for workers eased somewhat, with hiring focused primarily on replacement rather than growth. So they're just replacing workers according to the Fed. Prices, inflation has continued to moderate, with selling prices reportedly increasing at a slight or modest pace in most districts. Still, the prices of some food products, such as eggs and dairy, were reported to have increased more sharply. Home prices edged up in many districts. Many districts noted increasing price sensitivity among consumers. Input prices generally rose moderately. Contacts across several industries noted more acute pressure from rising insurance and healthcare costs, which we've talked about. Multiple districts reported that the input prices generally rose faster than selling prices, compressing firms' profit margins. So more of the same. It's basically, it says the prices are still going up. Our employment steady to rising a little bit, but just hiring's focused on replacement. And then basically the economic activity is pretty much the same as in September, according to the Fed. So when you look at that, small businesses represent, about 60, 70% of our economy, as opposed to the large businesses. And according to the business networking platform, Alignable September revenue and rent report, 48% of small business renters could not make their rent payments. That was up from 41% in July and August. It was the biggest it has been since the COVID recovery era in March of 2021, when 49% of small business owners were delinquent. Additionally, the report highlighted a cash crunch among small business operators, with 43% saying they only have 1 month or less of cash reserves, a 14 percentage point increase from August. Other thing that came out besides the Beige Book was the Conference Board Leading Economic Indicator Index this week, and it provides an early indication of significant turning points in the business cycle and where the economy is heading in the near term. And they reported weakness in factory new orders continued to be a major drag on the U.S. Economic indicators in September as global manufacturing slump persists. Cycle indicators, additionally, the yield curve remained inverted, building permits decline, and consumers' outlook for future business conditions was tepid. Gains among other LEI components were not significant enough to offset the weakness among the 4 gauges mentioned above. Overall, the LEI continued to signal uncertainty for economic activity ahead, and is consistent with the Conference Board's expectation for moderate growth at the close of 2024 and into early 2025. So speaking of manufacturing, the U.S. manufacturing PMI was released yesterday. The S&P Global U.S. manufacturing PMI edged up to 47.8. Remember, anything under 50 is in contraction. From a 15-month low of 47.3 in September and compared to a forecast of 47.5. The reading signaled a deterioration in business conditions in the manufacturing sector for a 4th consecutive month, but with the rate of decline moderating to the slowest since August. So heading up, still in decline. Also released this week was the Richmond Fed Manufacturing Index. The composite manufacturing index in the 5th district was at -14 in October, pointing to less pessimism than the -21 in the previous month. So it's still negative, but completing 12 consecutive negative figures to mark the whole year of declining activity. Capital expenditures accelerated their downturn, and the number of employees continued to decline, although wages accelerated. On the price front, input costs decelerated, but manufacturers still raise their output charges at a higher magnitude. So when you think about that, again, manufacturing is still not back. I have a friend of mine, he owns a big metal fabrication company. He's got 7 different factories around here. A couple years ago for my birthday, I toured it, took all day to do it. His robotics, he has everything. And he manufactures all kinds of things, but mostly things for consumers like mower decks and mower material and grills. And I ran into him this week. I hadn't seen him in a long time. I was, hey, what's going on? He says, oh my God. He says, all my customers are cutting their orders, and and they didn't tell me till they only need this many, and we just kept producing. And so now I've got all this inventory. I've got all this incoming material coming, so I have to call my steel suppliers and tell them I don't need it all the way down the line. I'm going to have to probably lay some people off. Me and my partner are taking 3 months without any salary because of this. And I'm like, wow, and he's pretty successful, but he's not liking what he's seeing from a manufacturing point of view.
Is that recent?
Next.
Is that a
was
recent?
that was 2 days ago.
Cool. Okay. That's
Yeah.
pretty concerning.
Yeah, and that's mowers and grills and smokers he was talking about mostly. And he says the smoker company is really in trouble, and they're behind in payments to him in the 7 figures right now. So,
Holy cow.
and that's here in the Midwest. Okay, so I knew that it was slowing down, but I didn't know it slowed down that much for him. But he's busily back working. They kind of let that company go on autopilot with all their new managers and people, and then they had to come back to work because it's not good from his point of view, just in his business for sure. So unemployment claims came out this week, and that was kind of good news from the unemployment claim numbers, if you believe them. The number of individuals filing for unemployment benefits in the U.S. fell by 15,000 from the previous week to 227,000 on the period ending October 19th. That's the lowest since the start of the month, okay, because it comes out every week. Well below market expectations that they would remain at 242,000. The only problem is the continuing jobless claims rose. So that, the number of people who are continually, they're not getting off of unemployment, that rose to 1.897 million Americans. And that's the highest since November of 2021. Building permits, let's look at housing. Building permits in the U.S. fell by 3.1% to a seasonally adjusted annual rate of 1.425 million, revised down from a preliminary estimate of 1.42 million. Approvals of units in buildings with 5 units or more, it's kind of like apartments, tumbled by 9.2% to a rate of 405,000, and single family authorizations went down by 0.4%. New home sales provided some better news for us. Sales of new single family homes in the United States jumped 4.1% to a seasonally adjusted annual rate of 738,000 in September. That's the highest level since May of 2023, following a downward revised 709,000. So government revised last month's down by 709,000 in August and above the forecast of 720,000. The median price of new houses sold in the period was 426,000, while the average sale price was 501,000 compared to 426,000 and 515,000 a year earlier. The last 3 months have seen significant downward revisions to the new home sales. Many home builders are offering large incentives to move their ever increasing inventory. So maybe some of those incentives are paying off some points for mortgages. Who knows what they're doing? But it didn't. The good news didn't go on for very long. When we look at existing home sales, and then you think about what's going on with the mortgage rates, and we'll talk about that in a little bit, but with declining Fed funds rates, it didn't help the mortgage rates at all. So existing home sales in the U.S. fell 1% from the previous month to a seasonally adjusted annualized rate of 3.84 million, the lowest level since October 2010, following an upward revised 388 million in August. So there was an upward revised. We don't see those very often. And below the forecast of 3.9 million, the median existing home sales price declined for a third consecutive month to 404,500 from 414,200. So we're starting to see prices of existing homes come down, probably because they're sitting on the market longer. People are trying to, dump them, and so the prices are coming down. And we've talked to Trent about, in his area, and how many houses are for sale in there, especially, he's got the Airbnb world around him, second homes and such, but he's in a nice area, for vacationing. So you would think that the housing market would be in better shape because the Fed lowered, Fed fund rates by 50 basis points. But the average interest rate for 30-year fixed rate mortgage in the U.S. was actually up, covering about a 2-month high, according to the Mortgage Bankers Association. Mortgage rates hit a 2-year low of 6.13% in September, but have risen in the last weeks alongside Treasury yields, reflecting a belief among investors that the Fed will not act as swiftly as to lower interest rates as previously thought. So you think about that, and everyone thought that when the Fed lowered rates, and what they do is they lower the Fed rate, which is the rate that they use to lend money between banks overnight. Okay, it's on the short end. Has nothing to do really with the longer end of the bond, the 10s, the 20s, the 30s. And you're seeing that since they lowered that rate in September, the actual 10-year yield has gone up. Okay, so when the 10-year yield goes up, the cost of mortgages, the cost of car loans, and the cost of credit cards goes up. It follows the 10-year. So when you think about a leading indicator for residential real estate, you think about mortgage applications. And this week, mortgage applications in the U.S. sank by 6.7% from the previous week. In the third week of October, the fourth consecutive contraction, and extending the 17% plunge from the earlier period. Applications to refinance a home loan, which are more sensitive to short-term changes in borrowing costs, fell by 8.5% from the previous week to extend the 26% plunge of the earlier period. Additionally, applications for mortgages to purchase a new home fell by over 5%. So, when you think about the 10-year yield, it's sitting at almost a 3-month high after rising 55.8 basis points from its 52-week low of 3.622%, and that was September 16th. And that's when the Fed lowered rates by 50 basis points. It's at 3.622. It's gone up 55.8 basis points. Meanwhile, the yield on the 2-year Treasury was about 2 basis points higher at 4.47%. So rates go up when there's pessimism that the Fed won't be aggressive with rate cuts moving forward. And you're starting to see that with the Fed and the Fed speak. I'm not going to go through it, but a lot of them who were like, we got to lower it by 50 basis points based on that one unemployment report are now saying, well, we might have to just slow down a little bit and, and see what happens in the economy. So when you think about interest rates, how does that affect budget deficits? So the U.S. budget deficit grew to 1.833 trillion for fiscal 2024. That's the highest outside of the COVID era, as interest on the federal debt exceeded 1 trillion for the first time, and spending grew for the Social Security retirement program, healthcare, and military, the Treasury Department said on Friday. The deficit for the year ended September 30th was up 8%, or 138 billion from the 1.695 trillion recorded in fiscal 2023. It was the third largest federal deficit in U.S. history after the pandemic relief-driven deficits of 3.13 trillion in fiscal 2020 and 2.77 trillion in fiscal 2021. So when the interest rates go up, that's our highest. That's right now is our highest expenditure is interest rates. So the Fed is kind of playing with a two-edged sword here. They're trying to keep the economy from reinflating, and they're trying to keep the jobs from unemployment rate from rising. And then on the other side, they've got to work with the Treasury because these higher interest rates are causing our debt to go up. So I wanted to talk a little bit about, we talked a little bit at the end of last week's meeting about, the markets are at all-time highs. Let's talk a little bit about that. So I want to talk, about the markets, which have been at all-time highs, even in this current economic turmoil that we go over each and every week, and including this higher inflation environment that we're in. So, how can markets be at all-time highs with all this less favorable news that I talk about all the time? Well, number one, I always say markets are not the economy. And number two, the market tends to lag the real economy, okay? We saw that prior to the Great Depression, the dot-com bubble, and the Great Financial Crisis, okay? You can go look and see the markets went up before they went down, okay? And you had the same kind of news, and I can go back and show you the news stories from the Great Financial Crisis, and they look like the same news stories we're starting to see today. Not that that's going to happen, but history can repeat itself, and I just feel like I'm in a leery position, like I've been here before. So one possible explanation may be that the markets are overvalued. So are they overvalued? The average annual return of the U.S. stock market since its inception is approximately 9 to 10%. This figure is based on historical data going back over a century. So how have the markets performed since the Great Financial Crisis? Remember the Great Financial Crisis, they lowered the interest rates to zero. For the S&P, as of October 24, 2024, the S&P has gained approximately 295% since the market low of March 9th, 2009. This represents a compound annual growth rate of around 11.5% during this period. So, 2 to 2.5% higher than the average. The NASDAQ has experienced even more gains with an increase of approximately 480% since the market low in 2009. This translates to a growth rate of around 15.5%, so about 6% above where the average is since the inception for the last 100 years. So this is significantly higher than the long-term average, and it's likely due to a couple of things. One is quantitative easing. The Federal Reserve's aggressive monetary policy, which involved purchasing large amounts of government bonds and other assets, that helped boost stock prices. Corporate earnings growth, strong corporate earnings growth has also contributed to the upward trajectory of the stock market. And we've got, the Mag 7 and their earnings are just going nuts. And you see that, and it's not all companies, but that has pushed the markets up. And lower interest rates. The lower interest rates have made stocks more attractive as an investment relative to other assets. So when you don't have any, we remember those days where we had 0% in our checking accounts for interest. Now the interest rates have gone up. We've gone out. We've gone to Treasury bills. We can get 4.7%. We feel like millionaires now. So I went out and I looked, and a couple of the people that I follow. One is David Rosenberg, and he's known for predicting the 2008 market crash and the recession. And he has a firm called Rosenberg Research, and he just recently put out a note to his clients that the current market, in his mind, is in a mega bubble, and he cautioned his investors against chasing momentum. He says, when this mega bubble pops, it'll be spectacular, he wrote. This is no time to chase momentum or the herd mentality. Rosenberg cited high valuations, investor positioning, and sentiment as warning signs. The most recent AAII sentiment survey, which tracks investor sentiment, shows 45.5% of its respondents characterize themselves as bullish, and that's above the historical average of 37.5 for the 49th time in 50 weeks. So he says this is the mother of all momentum-driven stock markets, he said in his letter. He warned that the S&P is at least 25% higher than fundamentals suggest, and it should be with stock prices outpacing earnings growth and analyst EPS revisions trending to the downside. So he's saying, if you go and look what's happening on these earnings, and everyone says, oh, the earnings are great, 70 to 80% are beating their earnings, go look at what the analysts have been doing over the last several quarters. And what they're doing is they're bringing their targets down, and so these companies can hit it. So when you look at it, Bloomberg Intelligence said that companies in the S&P are expected to post an average of 4.3% increase in quarterly earnings for Q3 compared to the previous year, and that's down from 7.9% growth projected in mid-July. So even Bloomberg's coming out saying, we're going to lower what we think that their earnings are going to be based on what we're seeing from our analytics. So Rosenberg, he's bearish on the economy. There's bears and bulls, but he's a smart guy, and I respect what he says. And he anticipates recessions on the horizon, and he pointed to emerging signs of economic weakness, including a rise of unemployment and decreased job openings. So his warnings come at a time when the S&P is seeing significant gains. It's up 23% year to date, and that follows 22% gains in 2023. And we just went over and said, average gains are 9 to 10% in the S&P. So you can see why he's worried about overvaluation. Then he wrote, the final sentence of his client letter. He said, J.P. Morgan reportedly once commented that he got wealthy not by buying at the lows and selling at the highs, but rather by being involved in the middle 60% of the bull market. He says we're well past that point. So I thought about that, and I thought about that's kind of how I think about swing trading, is I don't want the lows and I can't get the highs, but I trade between the lines right in the middle. And that's why, this week has been a slow week for me in swing trading, because I don't see much in the middle right now. They're either at the highs or they're way at the lows. So not only did Rosenberg say this week Goldman Sachs backed up what Rosenberg was saying, but for different reasons. And their reason was market concentration. We talked about this. We've talked about this over time on these platinum calls. And we talked about it a little bit last week. But Goldman Sachs strategists led by David Kostin estimate that the S&P index will deliver an annualized return of 3% over the next decade, well below the 13% returns in the last 10 years and long-term average of 10%. That's also down from the investment bank's previous projections, Goldman Sachs, which put the S&P 500 index at an 8% annualized total return during the next 10 years and falls below consensus estimates of a 6% total annualized growth for next decade. And the main drag in Goldman's forecast is due to an extremely high level of market concentration, particularly when it comes to the 10 largest mega cap tech stocks, the strategist wrote. These top 10 companies, which include Apple, Microsoft, Amazon, Nvidia, Alphabet, and Meta, account for 36% of the overall index and are driving much of the returns. So far this year, these leading firms have returned nearly 47%, compared with 36% for the index as a whole. The premium valuation of the top 10 stocks is the largest it's been since the peak of the dot-com boom in 2000, the strategist said. So this is the best explanation I have for why markets are at all-time highs, and economic news seems to be so dismal. Okay, and you can go back, again, like I said, you can go before the Great Depression, you can go before dot-com bubble, you can go before the Great Recession and the Great Financial Crisis, and you can see what happened to the market and what right before. So these aren't unprecedented. Again, can it happen again? I don't know, but I feel like I said, I feel like we're in the same situation that I was in 2008 in the dot-com bubble. But we do have some good news, okay? And that comes from the IRS of all people or all groups. They announced the new federal income tax brackets and standard deductions for 2025. The standard deduction, and this helps us, okay, the regular guys, okay. The standard deduction will increase in 2025, rising to $30,000 for married couples filing jointly, up from $29,200 in 2024. And starting in 2025, a single filer can claim $15,000, and that's up from $14,600. Okay. And it's an announcement Tuesday. The agency raised the income thresholds for each bracket. So each bracket now you can make more, okay, within those brackets, okay, meaning your taxes are staying relatively low, okay, which applies for the tax year of 2025 and returns filed in 2026. The IRS also boosted figures for dozens of other provisions, including long-term capital gains brackets, awesome, estate and gift tax exemptions, and eligibility for the child tax credit, among others. So I know around here, the estate tax, the death tax is a big deal because farmers have a lot of land. And I believe that it goes up this year to $14 million before you start getting taxed. And that's a big deal because it started out at $3 million before this happened. So the bad news is that this that after 2025, lower taxes that they keep blaming on Donald Trump. These were the Donald Trump taxes that helped all the rich. Will sunset if Congress doesn't come and reinstate it. If the provision expires, the tax brackets will revert to 2017 levels, shifting to 10%, 15%, 25%, 28, 33, 35, and 39.6%. And Trump's tax cuts also included the higher standard deductions and estate exemptions, which will sunset in 2025 if Congress doesn't extend that tax break. So how it's going to affect farmers around here is it's going to go, if it doesn't get extended, it's going to go from $14 million down to around $3 or $3.5 million, which means a lot of people who try to pass on their farm to their kids after they pass away, they're going to have to sell the farm to pay the taxes, which is why they raised it in the first place. So it's a big concern around this part of the country, especially, on the estate death tax. And again, child tax credits and all that will revert back to where it was 8 years ago. So just keep that in mind. So that's what I got on news. Anyone got anything they want to add, subtract before I get into something else here? Trent?
I was thinking about, so I think a lot of them here around Top Texas for this big antique and art show event. And this week, it's like they shut the lights off and shut the door. And that could be partially because of some scheduling issues that have arisen this year between the Chamber of Commerce or Red Top and one gentleman who is a big player in this market, who opened up a week early. But I think it has a lot to do with it reflects a lot of where the consumer is when it comes to spending. And I got to thinking about it today. We went to dinner with some friends that we've met while here, and they were telling us, during 2021, 22, and yeah, the first part of 23, they were doing, you know, somewhere between 60 and 100K at these shows, and she's selling paintings. And then it's dropped off, and they'll be happy to get out of here with $20,000 in 2 weeks. And I got to thinking about what caused that big rush when during the early from 2021 to 2023, and it was the availability of money. It was mailbox checks. It was low mortgage rates. People come here to decorate their homes, and with big pieces, if it's furniture, if it's paintings or art of some sort. And she said they were throwing money, like literally spending thousands upon thousands of dollars during that period of time. And now you look at where the housing market is, and you look at mortgage rates at 30-year fixes at 6.54. We're not buying homes anymore, so we don't have anything to redecorate. We don't have any place to, we're not replacing anything. We're not renovating, that kind of thing. And it got me to think about the companies that are paying the price for that, and that's companies like Restoration Hardware or Pottery Barn, or big furniture type companies or decorative type companies. And then we were talking at dinner the other night, and I said, when you see mortgage rates drop below, say, 5.5 again, and you start to see new home permits go up, start to see new home sales and existing home sales come up, come here with your big priced art and antiques, because people are going to be flush with money again. When you see that cycle, and it's really taught me we have to pay attention to the economic cycles. We have to pay attention to these swings in our economy. And with money so high in cost, it's more expensive to buy things, so we don't buy as much. And with the Fed lowering rates and that really not working at all, I look at this and I go, well, where can I go to buy from a more intermediate to long-term investment approach? Where can I go to where I'm going to get inflating of an asset class? And I think that's why we're seeing gold go up. We're seeing silver go up. We're starting to see metals go up. And I'm talking intermediate to long term. But like Mark was saying, getting rich off investing is capturing that 60% move in a move. So if you can capture that in a cycle change like we're seeing, you can capture that 60% move and you can make money in it. And I think that's really what, optimistically, there is opportunity in this investment environment to find companies we can invest in, short term to long term. But when you look at the cycle movements, you can capture that 60% element and you can make money. And I don't think you have to have a bad year. I think there's just great opportunities everywhere. We just need to look at the cycle move. So that's what I've learned in the last 2 weeks, is more and more paying attention to where the cycle is moving. I look at Bitcoin. You're seeing movement in that. You're seeing movement in some energy, but that's a lot of narrative driven because of the AI thing. But there are sectors where things are going to do well because of this cycle change. And so, and Mark has talked about, we've talked about a lot, we're entering a stagflation environment this quarter. We're moving out of a more of a tip of a recessionary environment to a stagflation. So what does well, and how can we capture that 60% in those asset classes, both from short-term and a long-term perspective? So I don't know. A lot of deep thinking this last 2 weeks, and I
What
had
was
a
that?
lot
What
of
was that?
time to do a deep thinking.
What was that called? Deep Thoughts by Don Hendley or somebody on Saturday Night Live way back when?
Oh,
Yeah,
deep thoughts by yeah, I know who you're
Don
talking
somebody.
about.
Yeah. So
Yeah.
speaking of
Uh,
deep thoughts, we got Bob with his hand up for a second here. Bob, give us some deep thoughts.
Well, I thought, oops, Mark, I think it's very interesting when you're talking about farms
Mhm.
and that if these tax laws revert back, they take those tax laws that are currently on the books, go back to how they were previously. Let me tell you, I can explain what happened to me, to my family, in trying to anticipate 50% estate taxes. That's a big amount of money. The bigger the estate, and by the way, hey, you could have $1 million estate and still fall under 50% on your estate taxes.
Mhm.
So what my family, my mother and father did is we developed CLATs, Charitable Lead Action Trusts. I don't know if a lot of people are familiar with this terminology, but let me be quite clear on how this works. They're typically a 15-year trust. They're paid out to beneficiaries. No, by the way, those beneficiaries aren't your blood. They could be they could be charitable. They are charitable organizations. And if there's any money left, then the blood beneficiaries would get it. But when you've got a payout of 15 to 20% every year, you can start eating into your trust principal very easily, unless you're selling drugs on the street.
Which we don't recommend on this channel.
No, I understand that, but I just want to get the point across what it takes to earn a 20% return. Now, I understand Trent, he's been talking about metals and that's fine if it works. And I got to tell you, I didn't see much coming back to me. As a matter of fact, you know what I had to watch for? I had to watch to see when we're going to run out of money. Because then I have to go before Supreme Courts, like in New York State, in the county I live in, and say, hey, look, the trust is going to run out of money. We got to send out letters to the beneficiaries and they got to sign off. And if they want to be nasty, they can be nasty. That's the problem when you bring in outsiders. So all I'm saying is the last thing I want to see us reverting back to my parents died in 2008. And we had started conceiving these things in 1999. We were trying to have forward thinking. I was involved in this decision making, and it made a lot of sense. But I'll tell you, when you got 50% estate taxes, you can just see your principal go overnight. Well, and it is when you got to pay the IRS and your state government. It's a real eye opener. So, Mark, I feel for these farmers, not just in your area, but all throughout the United States, because I've seen it happen where I live. I live in a very provincial area. And I have seen small farms just disappear from sight. And I've seen it where it's gotten into big farm. I mean, it's gotten into now on farms. It's amazing how big they've gotten farms where they drive cattle. Cows know when to come in to their stanchions to get milk. And they don't go into their stanchions. They go into a milk parlor, they get milk, and they go back out and start feeding again. I mean, it's like a factory. You got a 24/7. That's how you operate. So,
Hey Bob, do you think, I mean, this affects the politicians in some way or another. And I had a client years ago once told me, he said they'll never get rid of LLCs or CS corps because they all own them, and they won't change the tax status on them because they all own them, and they're all using them as shelters or some sort of. So they won't threaten that for which they use. Is this the same thing though? Is this the same thing a politician could be facing a Pelosi or one of these other politicians who have made millions on on the stock market, miraculously.
She's a good stock
Is
picker.
this just a lot of narrative, or is this like a serious threat?
Well, I'll tell you, yes, I understand. You think a lot of politicians are wealthy, but you've got to remember, where do they get the votes from? They're not getting it from the 1%er. They're getting it from the 80%er. I'm talking 80% of the population, or 99% of the population, are poor. Now, what they're doing personally themselves and how they shelter their assets, you mentioned the lady from California. I don't know how her husband's doing it, but obviously right now it's under a favorable tax structure. Of course, they haven't died yet, but that's the other thing you got to plan on. When are you going to die? That's a hard thing to plan on, because we don't know when we're going to say goodbye. You know what I'm saying? Because those
Yeah.
tax laws occur, whatever's in effect, on the date that you die.
Yeah.
So there's risk.
I just have a hard time seeing them get rid of that estate tax side of thing, because so many people who influence the politicians are making tons of money, even though it's over 13 million. But I don't know. If it does disappear, I'll be shocked.
Well,
But
let me say this. This is when you also, where do you see it? It used to be the question is, where in the United States do you live? No, that's not the question anymore. It's where in the world do you live?
yeah,
And that's what people are making decisions on. And then they're also looking at offshore, changing your citizenship and going offshore. Your dad's talked about it. Like to the Bahamas or the Grand Caymans, sheltering
Yeah.
assets there. There's people that are doing that.
yeah. I think that that is the ultra wealthy, but I don't think it is the family who has the farm or this inherited generation to generation estate, who's got a $15 million estate, or a $15 million business. So yeah, I mean, I remember when it was 600,000. I remember when it went to, I think over a million, and then 3 million, then now you got this 13 or $14 million one. Um, I don't know. I think more and more, and granted, it's a handful of politicians, but I also don't think that 80% of America really understands estate tax at all, or is even aware of it.
No, they don't.
So, so they're not going to really be voting on that.
That's
They're not
right.
going to be
They,
saying,
they
"Hey,
don't know.
that depends on where you live, because they vote
Right.
around here on it. Because 13 million or 14 million is just a small farm here. It's a small farm. Okay.
right,
And it's a farm that has been built up over, like Jan's parents, they're 96. Okay.
yeah,
And they still have their farm, and he's had it in his family over 100 years. Okay. If this thing expires and goes back to 3 million, that farm will have to be sold.
oh
Okay.
yeah."
Yep.
Well,
And it's a small farm. It's a small farm. It's a family small farm. Been here over 100 years. If it doesn't, then it'll be able to be operated under the family still.
Yeah. So let me ask this question, and I know we're getting off the swing trading element of it, but how is a farm held? Is it held as an individual, as a like your Jan's parents own it, or is it held in a corporation of some structure?
No,
How are
they can
these
be
things
held.
held?
They can be held in an S corp or an LLC is normally, but that is by, okay, if I'm in an LLC, I can be the sole owner. Okay. It still gets
Right,
taxed when I die. Okay. Because that money just goes straight into me no matter what. All LLC does is it limits my liability. If someone wants to
right,
sue me and take my personal assets. Okay. So, you know, unless you
yeah,
went into a C corporation and you had like shareholders and stuff like that, I
double
guess. But
taxation and the whole
yeah, yeah,
bit. Yeah,
double, yeah.
Yep.
And so try to do that. I mean, I talked to my big farm friends around here, and they are efficient. Okay,
yeah,
and you say we'll be lucky to make any money this year on these crops. Because there's so much crops still out there from last year. And go look at the price. Go look at wheat or soybeans or corn, and it sucks. Now they're storing it more. So again, they keep piling on their own problem because they keep making it. Well, then they got loans to pay off too. So it's a vicious circle out here right now. You know,
I
then
just
they see on the other side of it, here's my grain I put in, and then the box of Kellogg's goes up, 35%, and the amount in it, and you open the box and it's only a quarter full, and so they're like,
so
where's that? But the farmers aren't getting that money.
so is there a flood the market with corn, drive the price down, force Kellogg's to move the price down? I mean, is there a way to force them to move that price down by
Absolutely,
doing something like that?
they're doing it right now because the prices are so high. People are going down to lower brands. They're going to Maker's Mark or whatever.
Right. So that's
instead of
a
Kellogg's.
consumer demand element, not a farmers dictating the price of the end product.
Right.
Yeah.
So it is what it is. I mean, the cost of fuel, the cost of fertilizer, the cost of help, the cost of equipment, the cost of insurance, the cost of property taxes, all are up. Okay. But I
Yeah.
can't raise my price on, in corn because it's a market price that's market priced by the world. Okay. Because Ukraine, even though they're in a war, they're still a large producer of grain. Russia,
Yeah.
Brazil.
Big producers.
Okay.
Yeah.
Yeah. I've learned a lot.
Yeah.
I've learned a lot about the whole thing, and it's anyway. I don't mean to get off on a tangent, but it is part of the
No,
economy.
but it's also this is that cycle switch. This is where is the investment opportunity? Where's the trade opportunity? Is there, you hear OPEC, having what was it? What they came out with, they're producing more, which would drive the price down or something of that sort. When they decide to hold, stop producing, value of oil goes up and vice versa. Is there a trade or some sort of intermediate term investment approach that can be capitalized on with where we're at? And I guess that's where I look at what's going to happen to corn. I mean, can corn inflate
Well,
to significant numbers?
I think we're looking, and then the market's waiting for the election to happen to see which policy is going to be put in place. I think that if one side of Trump wins, you're going to see energy companies, you'll see their prices because they're going to be able to go out and produce. Okay. You're going to see maybe steel companies because of the tariffs and things in the U.S. Those companies are going to feel better. Car companies maybe. I don't know. You got to go look at what the policies are, and on the other side, higher taxes and more stimulus type money going out. Okay, what's that going to do, and who benefits from that? Is it? I don't know.
Yeah.
I'm just going to wait, and let the market tell me what to do and watch the charts, and that's what I do to see where I'm going to go. And I have no idea. I have no idea. I told you this week. I mean, I haven't traded hardly at all. I had one position in the portfolio because there was nothing. I mean, I've got more companies on my list that are trading right along the upper intermediate resistance level than I've ever seen in my life. Okay. And I've got just less companies on my watch list that get knocked off, and there's just nothing setting up for my swing trade. So I got a little bored and I got to thinking, and I'm watching, the political news. And so I told you, I just told Trent, I said, just as speculation, I bought some of that DJT, that Donald J. Trump, and it's been going up. It's up 12% today. And it has not, the chart looks pretty good. Now it's up against the intermediate resistance level, so I should sell it. But I got into that like 4 or 5 days ago, and that's just election momentum. It has nothing to do with that company because it doesn't make money, But those are the kind of things that I've been forced to look at because I can't find anything that looks like, that meets my trading requirements. Paul on the other side, he's looking at momentum stocks. Okay. He's looking at 52-week highs and he's trading on those. Okay. So he's found some that done well there. They're just fewer and fewer in between. Thursday or last Sunday, I put out over 34 potential swing trade stocks at different levels of risk, from the high flyers, like Paul calls them, to the ones that are trading under the 200-day moving average to just the few that I found that meet my trading requirements. So it's a few and far in between, but we're still putting out the numbers. We're still trading, but it's a different market, and the market just seems to be waiting, you know. So look at your treasury bills and buy those every Tuesday, and don't lose money. The key to making money is not losing money, and so the way I look at it, with my swing trading guidelines is, I like to sail. When I go to Florida, we charter a boat and we sail. I have a big lake 5 miles from me. My friends have big sailboats. We sail. But we don't sail every day just because we want to. We sail when it's nice out. If it's storming out, we just say, okay, we're going to stay in the bar and drink, and we'll sail on a nicer day. And I look at the market that way. Sometimes the market looks like a big storm out there on the Gulf of Mexico, and I don't want to sail on it. And other times it looks great, and I'll spend days out there. And right now it just doesn't look. It looks like there's a big storm out there for me, and so the market's not providing me with a lot to go on that meet my personal trading guidelines. But there's other areas like, momentum trading under the 200. So, you focus on that. And then you focus on longer term stuff like Trent, you're trying to talk about. What do we find for a longer term? I think you're putting together a portfolio now, and you're using that to kind of build a portfolio of longer term trading.
Yeah,
Absolutely. When we're done here, I'll show you something I've been thinking about. Well, something I actually do for income, because that's another thing I do. But anyway, I want to keep talking with people I want to talk about. Go ahead, Trent.
No, I started, what got me to thinking about was like Kerry's very much where the future of AI and artificial intelligence and all that is going. And I was watching Elon's SpaceX rocket catch, and I got to thinking, I'm like, does he make all those parts in that rocket? And then I was like, no, he doesn't. He goes and finds other companies to make certain parts of them. One of them is Boeing. At least that's what it's speculated. Boeing provides some sort of part for them. But I started searching different companies and the little companies that provide the hardware for SpaceX, which then
He froze.
All right, you there?
Yeah, I think Elon's turning off your Starlink.
I think he is. I think the government's trying to shut him down. uh, but it got me to just thinking of like the whole energy thing with with the AI thing, the data centers. And there's been a lot of talk about companies like Amazon, Microsoft, Google teaming up with these companies to produce nuclear power. And what I don't think people understand is they haven't actually exchanged money. What these companies are doing is they're going to these companies wanting to provide nuclear power on a basis of, you show us that it can work, and then we'll pay you for it, kind of concept. So we've seen a handful of these companies, the nuclear or energy-based companies, take off here recently. And yet what people I don't think are noted or have read is there's no money exchange at this point. It's a prove the concept before I hand money over. And so there are a handful of them out there that I've been looking at and entertaining. I came across one that not Sam Walton, the guy who founded ChatGPT 3. I posted it up today.
Sam
But
Altman.
anyways, Altman, thank you. OKLO is the Okola Inc., I believe is what it's called. And he's put money into it. He owns 2.6%, but this is an energy company in the nuclear sort of silo. But the thing is, they haven't produced anything. They haven't made any money. And so there's a lot of narrative around this concept of nuclear energy. It could be efficient. It could be a way to produce, the energy needed for the the onslaught of AI and technology. And I was thinking about this, the increase in technology and the increase in energy demand has skyrocketed in the last 25 years. And the
You're
more
talking
and more
about
we see
Talon,
that,
right? You're talking about Talon, right?
no, that's one
Okay.
of them. But this one is Sam Altman has put money into it. But it's gotten me thinking more and more is like, okay, we're going to put so much demand on our infrastructure energy wise as AI and all this tech develops. Where are we going to get, where is the opportunity? Where can I catch that 60% move in that area? And energy is one of those areas that I've really been focused on here recently. So I don't know why I was bringing that up, but anyhow.
I think I roped you into it. So
Oh, did you?
I wanted to rest my throat for a little bit.
Oh, okay.
Yeah, I'm
Uh,
that way. So
yeah.
okay, anything else? I got some things to talk about, because unless you guys have something else. Okay. Okay, so this week was really slow, and I've talked to you guys before. I have a swing trading account which was slow this week, and I have long-term investments, okay, that don't require much, babysitting. And then I have an income strategy that I use, and a lot of the income that we talk about here, is treasury bills, and I help my friends who are older and figure out the process of how you go and buy treasury bills every month or how it works. And I on the something that I do on the riskier end, okay, and it isn't for everybody, and it's certainly not financial advice, is I go out and I look for income yield because, you know, I always think about, you know, what is your monthly income and how can you enhance your monthly income utilizing hardworking cash that you have. And one of the ways is treasury bills and REITs will pay out like, monthly. And so there's another little strategy that's come out, and it's fairly new. It's riskier, but I've been using a strategy, and it's using option income strategy ETFs. Okay, and basically an option income strategy ETFs. They're type of exchange traded funds that employ option writing strategies to generate income. Okay, that's their main reason, is to generate income. These ETFs typically invest in a basket of stocks and then sell call options on those stocks. So by selling call options, the ETF generates income from the option premiums, but however, it also limits the potential upside of the underlying stocks, as the ETF is obligated to sell the stocks if the strike price of the option is exercised. So the benefits of option income strategy ETFs, number one is income generation. These ETFs can provide a consistent stream of income through option premiums. Risk management, option writing can offer some downside protection as it limits potential losses. And diversification, investing in option income ETF can provide diversification across a range of stocks. Okay, so I started looking at these. I've been looking at them for a while, and recently there's some companies out there that are providing single stock option income strategies. Okay, and so again, I want to emphasize that they're riskier. Okay, limited upside. The option writing strategy can limit the ETF's upside potential. There's market risk. ETF performance is tied to the overall market. Okay, so if the market dumps, it can negatively impact the value of the ETF. And I'm talking about your principal level. So if you buy one of these and you buy it at $50 and then the market dumps, it could go down to 25. So now you've lost half your value, even though you're still getting income. So you got to worry about that. Again, that's part of the volatility that can fluctuate due to the changes in the underlying stocks. So if you have a basket of stocks that's focused on technology and the technology sector goes down, that's probably going to affect your ETF also. So with that all being said, okay, and again, this is no way financial advice, but this is something I use as a part of my income strategy, that you can generate weekly income with just 4 yield max single stock option incomes strategy ETFs. Okay. Yield Max is a company that's come out, and I've been watching them, and I've been in these for a while. And they've changed their strategy now at Yield Max. It used to be like the first week of every month, all of these option income strategies would distribute their their dividends. Now they've placed them in 4 buckets, and so that every week of a month, if you have one of those products in one of those buckets, list A does the first week of the month, list B does second week, list C does the third week, list D does the fourth week. And so I'm like, well, that's kind of interesting, because I could develop a strategy where I get some kind of pay every month, every week, and I can reinvest it back into the strategy if I want. So I buy more shares, dollar cost averaging, or I can take that money and go buy something else with it, or invest it elsewhere, or take a flight up, see Paul, play some chess with him up there, hang out in the good life up in the Northeast. So anyway, I have a strategy. I use 4 of these income strategies, and they're single stock. Okay, so the first one I yield is called the Yield Max MicroStrategy Option Income Strategy, and the symbol is MSTY. And it's relatively new, and it aims to generate income by investing in MicroStrategy stock and writing covered call options against it. The second one is the Yield Max NVIDIA Option Income Strategy. Okay, and it's NVDY. And it's an actively managed fund that aims to generate monthly income by selling or writing call options on NVIDIA stock. The third one is the Yield Max Tesla Option Income Strategy, or TSLY. It's an actively managed fund that seeks to generate monthly income by selling or writing call options on Tesla stock. Okay, and then Yield Max Coin Option Strategy, which is Coinbase, and it's CONY. And it's an actively managed fund that aims to generate monthly income by selling or writing call options on Coinbase. So each one of these has a different week that it will pay off. So what you're getting is weekly income based on how many of these shares you own. But again, the danger is that what you put into these, okay, you buy it at 50 and the market goes down, and now now it's at 25. Half of your premium's gone, but you'll still get income, and that income will be various based on how the underlying stock works. Okay, so if I did an example, okay, and I bought 100 shares of each of these. So Misty, which is the MicroStrategy, today was at around 28.17. Tesla TSLY, it was around $12.98. The NVIDIA option was at 26.53. And the coin was at 13.92. And if I bought 100 shares of each today, right now, the total that I would have invested would be $8,100.60. So in the October timeframe, I went back and I looked at the dividend from October 1st to yesterday, when MicroStrategy, the Misty one, paid the dividend. And I was surprised yesterday because I just implemented this strategy, and it's not normal, but it paid out about $4.20 a share. Okay. So if you had 100 shares, that was about $420 you got. Okay. Now, normally, if you go back, it pays out just under $2, but it had an extra 2 weeks in there because they just went into this weekly strategy. So I'm just going to go with that, and I'll make a comparison. The Tesla option income paid out $1.09 a share, so $109 on 100 shares. The NVIDIA paid out $1.09 per share. That's $109, okay, for 100 shares. And then the Coinbase one paid out $1,109 or around 110. I got about 110. $1,109, so it was $110.90. So for the month, okay, for that $8,100 investment, the total dividends received was $750. Okay, and that equals about 9.9% 0.19% on a monthly basis, and you annualize that, that would be 110.28%. Okay. If I went back and I went to the MicroStrategy one, the MSTY, and I just used the normal $1.85 that it's kind of been at, that would have provided me with $185 for my 100 shares. And the total of all four of these would have gone from $750 to $515.20 for the month. Okay, which is 6.31%, which is higher than I'm getting on my T-bills. And that would be about 75.76% annually. So when you think about your T-bills, and I have a lot of T-bills, so I'm not getting out of that. But if you have a T-bill and they're paying 4.7% on a 30-day T-bill, that would provide you with, again, that's 4.7% annualized. So you got to divide it by 12. That $8,000 would provide you with $31 a month. Whereas I look at this $8,000 providing me either, well, this last month, $750 or $515.20. So it's a strategy that these prices are fluctuating on these option incomes. If it went down by half, you'd have $4,000 in principal, but you'd still get monthly, option income. It might not be, $1.09 a share. It may be 82 cents. It might not be $4.19 a share. It may be $1.85, but those fluctuate. But it's an income strategy that can keep going and going. You can either dollar cost average back into it, or you can take the cash, but it's something that you can do with your money on a more risky scale. So this is how it works. The ETF invests in stock, okay, whether it's MSTY or Tesla or Coinbase. The fund then sells call options on these shares, and this generates an income from the option premiums. By selling call options, the fund limits its potential upside if the stock price rises significantly above the strike price of the options, and it generates income. So the primary goal is to generate monthly income through option premiums and dividends from that stock. So the risk is there's a concentrated exposure. So you're highly concentrated in a single stock. So if MicroStrategy goes down, or Coinbase goes down, or Tesla, or NVIDIA, okay, it can amplify both the gains and losses of that. And while options writing can generate income, it can also limit the fund's upside we talked about. And the performance of the underlying stock can be volatile, and you're looking at that with a MicroStrategy. Now with MicroStrategy, I like Bitcoin. I've been watching MicroStrategy for a long time. If the price of Bitcoin goes up, the price of MicroStrategy will correlate with it because all of their treasury in that company is in Bitcoin, and they're buying more all the time. So I believe Bitcoin is going to continue to go up. So that's why I don't have a problem with MicroStrategy or Coinbase. The other two are Tesla and NVIDIA. Okay. So they've been doing well, and their company is going to be around. Like Trent says, you're investing in Tesla, you're investing in Elon. And with NVIDIA, it's the best chip maker out there right now. So the other issue you might have are the fees on these are about 1%. So you got to consider that. So anyway, that's kind of the strategy I'm looking at. Let me pull up a chart for you. Can I?
Yeah, you should have access.
Okay,
I think one of the things to consider with this is you have to follow that underlying stock. So having stop losses to prevent losing, if NVIDIA fails at $144 a share today and heads to, 100, that way you don't lose that principal element of it. You just buy back in later on. So
right. I mean, that's one strategy to do, and that's the way that I would look at it. Is I would try to save on that, or the other strategy, if you're long term and you're lazy, is you just let it roll and you forget about it.
Yeah.
That's fine too. And like here's the MicroStrategy one. It's Yield Max MSTY option income strategy. You can see this was the dividend. So we've gone from up here to, the dividend went down, and today you're up, you're still down a little, but you didn't continue down. Your oscillators are off. and everything. So I just use it as an example. You can go back, a year
Mhm.
and see how it's gone. Okay, it follows the price of MicroStrategy. So if I were to put MicroStrategy in here, there you go. Okay. Same with NVIDIA's one, NVDY.
What's interesting is when you look at the distribution per share, you can see where the premium or the payout is much bigger. And if I'm guessing right, the upward volatility in the company was greater. So they got a higher premium for the calls they wrote versus when it flattens out or isn't as volatile, the distribution per share is lower. So that's sort of interesting.
Well, I mean, they use different strategies, and one of the strategies they work is a synthesized call strategy with puts, which is way beyond me. Okay, I don't do that. I'm letting them do it. But this is just part of my income side of the strategy. So it's not my swing trading side, it's not my investment side. It's part of where the treasury's bills sit. So I'm just trying to squeeze a little more yield out of my money with more risk. Okay. So I just threw it out there so that
That's interesting.
yeah, and here's Tesla, TSLY. Okay. But you see, every time there's a dividend, it's going to go down because it takes it out. But it's monthly. So the way I laddered it is every week, one of these is going to pay me out a dividend. Okay. And you can take that and either put it back in. Of course, Tesla went up. You can see what happened with Tesla. And so there you go. Let me see if I can pull something up here. I can find it.
Yeah, I'm curious to see what Tesla's distribution rate will be next.
Yeah, it's gonna vary.
Yeah,
Um,
it probably varies a lot on the volatility of the option
yeah,
as well, in a big way. So you
yeah.
had a lot of volatility in Tesla this week because
Well,
of earnings.
MicroStrategy too.
Yeah, so
Yeah,
you'll probably get a bigger payout.
yeah.
But
So I mean, it's a strategy, and I don't have all my money in it, but I tell you what, yesterday when I got that notice of $4.20 per share, that was nice, and I have more than 100 shares of that. I'll just tell you.
yeah,
And that doesn't happen all the
that's
time, but it was a nice surprise.
yeah,
So again, it's volatile, it's risky, not financial advice, but it's something I wanted to bring up because I really didn't have anything to talk about in swing trading because I really didn't do much this week because the market didn't let me. So I started thinking about other things and what I do, and I just wanted to bring that to the table.
that's cool.
Yeah.
Hey, Bob.
Hey, Mark, what's the symbol? What's the ticker for Coinbase?
CONY.
CONY?
Yeah.
And also, and you more or less said it. Obviously, we're talking about covered calls. What about on? I know what you say. You don't really care for puts, but that's another way of making income. And
No,
Max does do puts, writing puts.
I didn't say anything about not liking puts. I like puts. They do synthesized call option writing where they have calls and puts too.
Yeah,
Within
they've
these.
got a short.
Yeah, you can go to yieldmax.com, I think it is. They've got Tesla,
I
they've
put the
got
link in the chat.
All
yeah,
right, thank you.
they got ExxonMobil, they got Snow, they got Nvidia, they got Alibaba, they got gold miners, JP Morgan,
Yeah,
Netflix, PayPal. They got everything. Qs, you can do it on the Qs.
Hmm.
Just be careful and then look at the volumes too, because some of the volumes aren't very high. So the ones I use have the higher volumes and the expense ratio is up, but it's a strategy that I can just sit there and if I want to get in and out, I can. If I want to just let it sit, the one I have, I just let it sit. Okay. And if the principal goes down, it goes down. I don't worry. I'm looking for the income off of this. And that's in my mindset. That's in my guideline for my income investing, is I'm just going to let it go, just like treasury bills, and just like CDs. And it's a long-term deal for me. As long as they keep generating, I'll stick with it.
Yeah.
Anyway. So I wanted to share that. And I know it's not swing trading, but it is a part of an investment strategy that I use that's outside of the swing trading world. But I didn't know if you guys knew anything about those products. I just wanted to bring them up and say they're out there.
Yeah, that's a
Yeah.
good thing. And I saw the symbols, I don't understand, Mark. So, but the price of this one is not the original price of the stock, right? Those are different.
My thing was garbled. Did you hear that, Trent?
No, what I'm saying is, I know. Do you hear me okay?
Yeah. Go ahead.
Yeah, I
Okay.
can hear you.
So I know like those are based on individual stocks, but the price of those underscore Y stocks, those are not as pricey as original stocks, right? Like it's still, let's say Tesla is like 250 right now. So what it costs like a TLSY. So it's not like as pricey as original stock, or like I'm just wondering. I never see.
Right. So you're basically they're pricing it like if you compare the Nvidia one versus the Nvidia stock, there's a
Right.
big price difference. It's just how they calculate it based on their net
Well,
asset value, I think.
well, they distribute a lot of it every month, so
Right.
it brings the price down every month. Okay, by the amount of the
Okay.
distribution. So that's just like any other stock that gives a dividend. This is for income, so that's why it's different. That's why it's lower. Okay.
So when they go out and buy, say, Nvidia stock and then they write a call against it, they're lowering their basically overall cost basis. And then they add their admins and then they calculate that's how the price is calculated, maybe? Or the net asset value of it's calculated and then the market determines what the value is.
It's
I
just
know they do that with closed-end funds.
it's just like an ETF. Yeah.
Yeah.
I mean, it trades like an ETF. You can trade it like a regular stock. I mean, it has
Yeah.
volume, it has momentum, it has, bids and asks.
Yeah.
So again, it's just an option. It's an ulterior for income investing that's riskier, you know.
So
It's certainly
instead option, you are like betting like going up or going down, something like that, right? You have two options to uh, uh, so to I don't
Yeah. I mean, I think a lot of the payout is based on the volatility of the underlying option. If the option is rich,
right.
typically that's a relationship, the volatility relationship to the underlying stock. But if the stock's not volatile, the call option is not going to be really high priced.
Yeah.
And so that's where you see the distribution changes.
Yeah. You can go in and, you can go to Yield Max and you can see their distributions on some of these are pretty new and some of them are older. And you can see how they distributions move around, and I've been doing it for a while, so it's almost like Christmas. It used to be the first week of the month I'd go and see, and sometimes I'd be disappointed and sometimes I'd be very happy like yesterday. So, you know, um, it's just something to think about. I'm not telling anyone to go do it. Every investment has its risk and reward, so you got to kind of put it to how it fits in your risk management and financial horizon of how you want to make money. So it's just another tool in the toolbox if you want to use it.
Gotcha. Okay.
Yeah.
But that's good to know. I mean, we don't.
Yeah.
I see
What's up, Big Bad Bill?
what those really means, but yeah, thanks for the information.
But if you had like 1,000 shares of MSTY yesterday, you were pretty happy because that was $4,100 of dividend payment in 1 month.
Wow.
Yeah.
Yeah.
So you need people who own those stocks to get the dividends, or like Like if I want 100 Tesla stocks, if I buy TLSY, so
I'm having trouble hearing. Trent, did you catch that? Did anyone catch that?
no, I'm saying to get the dividend paid out, you need to own the underlying stocks like a Tesla or Nvidia. You need to own them, or it's not required.
I don't do anything with NVIDIA or Tesla stock per se, other than this. Okay, I very rarely trade in either of those. I do own MicroStrategy. I don't own Coinbase, but
Yeah, my question
I
is
guess
basically-
I own the options through these instruments here, though.
Gotcha. So those are independent of the base stocks.
Yep.
They're not. Yeah.
Yeah.
Okay. That's right.
Yeah, they're not a part of these companies. It's just YieldMax has come and made this product. You can do it on individual stocks, which makes it more risky. Okay, but it's a way for me to say I own or am investing in parts of NVIDIA and Tesla.
Yeah.
But I just do it for the income. I do it for the income. Now, again, you're not going to get what MSTY did yesterday, although they did have one at $4.20 earlier, but mostly it's around $1.85, $1.90, maybe $2 it's been. But for MicroStrategy, again, I have a belief based on my fundamentals and understanding of Bitcoin and my belief in supply and demand of Bitcoin and what's going to happen. Just my own personal that I think Bitcoin is going to continue to go up, and if it goes up, MicroStrategy is going to go up because they own 1% of Bitcoin right now of all Bitcoin that will ever be made, and they're going to keep buying more, and that'll make their stock go up. You can see what happened to MicroStrategy stock. I mean, it was a couple of months ago, it was at $130 a share. Now it's two something, 220,
Wow.
220, 221.
Hey, Mark,
Yeah.
I'm curious,
238.
do you use your same swing trading strategies on the UMAX ETFs?
Say that again. I'm sorry.
Are you using your same swing trading strategy on the YieldMax ETFs in order to get in and out?
No.
And
I think
then
the
Just buying and holding.
do you have to
normally,
hold them
yeah.
70 days before you get the dividend, or
Well, normally I think the best time to buy these is the day after the dividend is there, because it drops it down by MicroStrategy dropped it down by $4. Okay. And then, but again, you can do that if you want to do that,
because I'd be curious to know if the return was actually better if you're trying to just get income on those certain set of stocks like Tesla, Nvidia, Coinbase, and what was the other one you said?
MicroStrategy.
Oh, MicroStrategy. Yeah. So, instead of getting the YieldMax ETFs, why not use your swing trading strategies on the leveraged ETFs like TSLL, MSTX, NVDO, the leveraged ETFs for those assets, and then compare which return you get is better percentage wise.
I haven't done that, but that's something that interests me. Yeah.
Just
Can I
curious.
just say something with regards to that? Because I was looking on Fidelity on ETFs this morning, not on these ETFs, some others. And there is no resistance support levels for ETFs.
I think you're wrong. No, because I'm looking at the XLI, which is the industrial ETF for industrials. It's got it.
Oh, it does. All right. All the ones I looked at this morning did not. So
Yeah.
I thought that was just typical. They had all the oscillators.
Yeah.
And by the way, they didn't also have the, the selling resistance area.
Right. Yep. Yep. Yeah. XLE does. Yeah. I'm just, I normally just look at the 11 sectors of the S&P when I'm looking around.
I
Just
got
to
you.
see where
All
the
right.
money's.
Thank you,
See where
Mark.
the money's flowing. Yeah.
Mark,
How much you bought the MSTY? How much money you put in?
Well, I'm not gonna say that, but
Roughly.
I mean, I just use as an example 100 shares because I normally when I buy in 100 share lots because I know that that's how they trade them. If you do 5 shares or 50 shares, then they go in and they wait until they get the equal part to the hundreds because that's how they trade them. So I always just do 100. It makes my trading easier. But I have quite a few.
One way to look at it is the risk element of it. So if you're investing in treasuries, you've got a probably on a scale of 1 to 5, a risk element of say 1,
If even,
or
yeah.
2.
Yeah.
2. Okay. This is probably going to jump you up to about a 5 because of the underlying stock, especially Nvidia, especially Tesla, all these, they're very volatile companies. And they could easily lose 10%. Well, you're going to lose 10% of your value. Granted, it's offset with a distribution of, I don't want to call it a dividend, but it's a dividend.
It is a
Some
dividend.
level
Yeah.
a dividend. Okay. So I think when you're looking at your risk of your overall portfolio, it would be something to take into account that the risk element you're going to probably double your risk element when you invest in these. So diversification, number one, within it. So not just all your eggs in one basket, but also putting in some risk preservation, like trailing stop losses or something like that, would be really advisable. But I think it's, if you're just letting it ride, I think you definitely have to take into account that they will go down because
Yeah.
everything eventually goes down at some point. Just a
No,
matter
it
of
will.
when.
Can answer my question. That's exactly what I meant in comparison to treasury bill. So it seems to me that if you are putting 10,000 in treasury bill, maybe just 1,000 or 2,000 on this. So I appreciate that. That made it clear here. Thank you.
Yeah,
So,
I just use as an example, you did 100 shares each, and it came up to $8,100. So you can just use an example and, compare that to a treasury bill. So the strategy with Yield Max would have gotten you $750 over the month of October, where the treasury bill for the same amount would have got you $31. Okay. But the risk factor, like Trent said, is higher. More risk, more reward. Or, more risk, more loss too.
and honestly, it's applying your your swing trading guidelines from the standpoint of how much am I willing to lose
Right.
to this concept. That is a risk that reduces your beta, your risk element down. So if let's say you said, okay, this has a volatility range, standard deviation range of say 5% upside or 5% downside, maybe you stick your trailing stop loss at 6%, so you don't get stopped out of it right away, but you reduce that potential loss element. So not to get too complicated, but it's one of those ways you can manage that risk, and that's the beauty of them is you can put stop losses on them. And you may get stopped out, but you can always buy back in when you see a better chart formation on the underlying company.
It depends on how much time you want to put into, your portfolios. Swing trading takes time for me, not like day trading would take, all day, but swing trading takes a little bit of time. If you have an income strategy like treasury bills, it takes, once a month. I swing mine, I ladder mine every Tuesday. So every Tuesday I spend a little time, buying treasury bills. Okay. So that's my extent of that. This one I watch. Okay. I'm not actively trading in these because I just want to see how the strategy works for me. Okay. I'm not concerned with the $8,000 premium on it at this point for me. Okay. Because my yield's so high at this point.
Yeah.
Question,
Bob's, Big Bad Bill's had his arm up for a while.
Oh, we don't want his arm to fall off.
got a question, what's the load on these things? What
It's about 1%.
percentage?
About 1%.
So they take out 1% off the top?
Well, 1% over time, yeah.
Yeah.
It's an
That's what I
annual
need to
number,
know.
right?
What's that? Yeah,
That 1% of that's annual. That's not every week.
right. It has a higher
Yeah.
fee because they manage it. This isn't managed. You know, somebody
Oh,
has
yeah.
to go in and do the, you know, the calls and the puts and the strategies. And so, you know, if you're gonna have to pay for some of that. It's certainly not a passive fund, but somebody's watching it.
Yeah.
But for me,
It's sort
that's
of
a
like an
price.
ETF.
For me, that's a price I'll pay for because I don't know how to do it like an expert. You know, it's hard
Plus,
to
it's
do for
work.
me. Yeah, it's work because you've done it, Trent. And I've never been a big options trader myself, just because I don't have the time. You know.
I think it's one of those things that's, if you think about your day-to-day life, you work for income, you do things to generate income to pay for the expenses of living. This is one of those ways that you can take the money you've earned, put it away, and have it pay the electric bill. This is, pay car insurance. Just one of those different ways that you can generate income. And at the end of the day, when it comes in trading, investing, it's about making money. And this is just a form of making money.
Yeah, I mean it's a different side. It's not swing trading for me per se. Okay, it's part of what I do in treasuries. You know, that's kind of way I look at it. This is part of my income here. I've had this forever. Okay, this is the taxable municipal bond trust, and I started out with a sum of money. I bought into it, and every month it provides me a dividend, and I just put it right back in. And it just I can't remember how many years I've owned this. Okay, BBN, and it just every month I don't even worry about it. Every month it puts it back in, and then dollar cost average, it goes up, goes down, and I just let it go. And that's just a part of long-term savings of that much money that I have, and it's an automatic deal for me on that one, but that's part of my income strategy, part of my income portfolio. Do we lose Trent? Trent hung up on us. Maybe he's buying those 4 funds right now. And he needed to get off. I don't know. So anyway, anyone else got anything to say? We're after 1. It's going to be a good weekend. I hope everyone has fun things planned and safe things, and a lot of football on this weekend if you're into that. And, baseball World Series starts tonight, so I'm going to be involved in that. Definitely. Other than that, it's been kind of a slow week for swing trading. And other than that, next week I'll put out another list on Sunday and Monday morning, and we'll move forward.
Hey, Mark.
Yeah.
I have a question regarding a purchase that Kerry made in this week. I don't remember. It was 20 share about some stock. I think it was Nvidia. I don't remember. But I just want to understand why he get that stock under the price that the stochastic is going down.
Yeah, I don't. Kerry doesn't run his trades past me, but I know that he bases his trades on fundamental analysis in his cheat sheet, and he doesn't focus on the technical analysis like we do as much. So I've seen the same thing, Julian, and I'm like, oh man, why did he buy that? And then I'll go back and I'll look at what his cheat sheet is and his plan off that cheat sheet, and go, okay, I understand why, because he thinks either earnings is going up or something happened in the fundamentals that he likes. So if you're on the 3 o'clock call, are you going to be on the 3 o'clock call?
Yes, 2 o'clock.
Yeah, that's Kerry's call, and ask him, and he'll explain it.
Okay.
Yeah, I don't want to speak for Kerry, but I know he's really into the fundamentals, and that cheat sheet is pretty detailed, and he can explain that better than I can. But I see the same thing you see. I just have to kind of back off, and that's how he trades, and he trades fundamentally, and we trade mostly technical over here. So that doesn't say
Okay.
they're right or wrong, either one of us. We just look at
Mhm.
different things, and get a different view
Yeah.
of things.
Okay. Thank you.
Trent, are you okay? You keep flashing in and out. Trent? There's 2 Trents there. No, there's 2 Trents there. Trent 1 and Trent
yeah.
2.
Well, I have a lot of friend requests from fake Trent.
Oh, no.
Yeah.
So,
And Kerry too.
okay, can you all hear me? Because I got kicked off.
We can see. We thought you just didn't like us anymore and left
No.
to go buy my MST
So
Life.
there, Manny sent me a text this morning. I guess there is somebody imitating me, requesting friendships or soliciting of money. In this case, it was Coinbase. First of all, I do not solicit money. I will never ask you to manage money or.
Nope. I think Elon's shutting off his Starlink again. I guess what he's trying to say is he didn't send those out, and he never would. There he's back. Yeah, you froze up. Elon shut you down.
I got a big windstorm happening. But no, that's a scam. Please send me shoot me a screenshot of what you're getting, because I'm trying to find the guy who's imitating me. So just be aware, we do not solicit money. We do not recommend you go to a brokerage account or set up a brokerage account somewhere like that. That you'll not get that from us. If you get some from Kerry, Mark, or I like that, please let us know it's fake. Manny today called me and we talked through it, so that was real helpful. But there's somebody's in there scamming, so be very careful. Don't fall for it. So hopefully that helps.
Yeah,
Yep.
Trent, I got I get 2. This was on the outside of the best of us, but in the Discord for a friend, I get 2 invitations from Kerry and 2 from Trent of Best of U.S. Investors, and I blocked them all. But yeah, I got something similar to that a month or so ago, and you said no, it wasn't you, so I got away from that guy as well. But thanks. It would be good to post that someplace that everybody can see.
So I'm posting in my office. I posted some today to everybody. What it would be real helpful is the title. It probably says Trent of Best U.S. Investors. Historically, there is something after that that's different than mine. If you can send me a picture of what that is, I can go search it.
I can do that on mine. They're in my blocked friend requests, so I'll copy their thing.
I will send you,
and put it on your page.
Yeah, just post it in my office. That way everybody sees it. That's real helpful. But please, 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 please don't transfer money to people out of the blue like that. It just don't. Go open a Fidelity account or something.
Hey guys,
legitimate company.
Hey guys, I have a question about Tesla. So normally the trading strategy that we are following or we are learning, right, say that we have to stay away from the earning call to do trading. In that case, how which is the way that we have to think, keeping in mind that happened this week with Tesla, for example?
Well, I mean, that's just on my trading plan. I get out because I'm on a swing trade. So it's a 50%. I don't know what's going to happen in the earnings. So it's 50-50 that it either goes up 15% or it goes down 15%. So on a swing, I'm going to get out before then in case it goes down. Now, in this case, Tesla went up. So how do I know that? How do I know that in the future? I don't. Okay, it could have went down.
Right.
It could have been like on the opposite, IBM. IBM came out with earnings and they dropped. Okay.
Yeah.
50%. So again, I'm willing to give up the upside if I'm already up to get out and in avoiding the risk of the downside. Okay, that's me. Now, if you're more risk averse and you believe, and you have more fundamentals in your thought process about Tesla or any stock that has an earnings call, you may stay in. Some people may sell half and keep the other half just in case. There's all kinds of strategies you can use. It's up to your own risk. I personally, since it's swing trading strategies, I just get out. Why risk 15% down when I don't, for 15% up and I don't know it's 50-50. So I don't like the odds for me. That's just me personally.
Okay. Yeah. Right. Thank
Yeah.
you. Yes. When the
So
We
it's-
Robot conference happened, they go down, and it was something like that.
When I started doing this, and earnings would come out, and maybe it would drop an eighth of a point or a quarter of a point way back in the day, or go up an eighth of a point or a quarter of a point on earnings. Now everything it seems it's 15% up or 15% down. And that's just the way it goes, and that's just that's too much for me to risk, on a swing trade. So.
And you think about it, you look at how much that thing jumped versus, it's most likely going to retrace at some level. It's a matter of where, I mean, it's got a big range right now that it's moving within. So I would let it settle out for a little bit, but I will say I track their revenue and earnings per share, and the revenue went up quarterly year over year. And of course, the earnings per share went up from on a quarterly year over year from a negative 46% back in June to a positive 17% this quarter. It was interesting using Kerry's employee count. It has gone from December of 23 at 47% increase annually to 40% to 29 to 10% on an annual basis. So their number of their employees they're adding is declining. So is that a sign from a fundamental standpoint, using Kerry's concept of employee increase and debt increase? Are they sort of not in a R&D opportunity development phase? Has that passed? I don't know. It's interesting. It's one of those little fundamentals to help you can apply. But yeah.
Hey, Trent, I noticed that you started a spreadsheet on potential stocks. Are you using technicals on that at all?
I'm using technicals. I've got a whole watch list I'm following, but it's sort of as I was telling Mark the other day, it is my version of what I see in the future. And I use the cycle concept. There's 4 different cycles, 4 different seasons. So I'm looking there, and then something sparks in my head about an idea, and I start to work through that idea. And so for instance, Talon Energy was one of those, looking at the demand of technology from an energy perspective. The questions in my head were, well, we have to produce more energy. How are we going to produce more energy? Who's efficient? Who's actually striking and getting paid by these big guys versus if you do this, then we'll pay you. And that's those kind of concepts. There's 2 in there that were fundamental research based that I received from another research firm. But I'm looking a lot at the cycle element and then applying my technicals to it. So a lot of it, like I won't buy NVIDIA right now because NVIDIA can't get through 144 right now. And I think NVIDIA's opportunity is down around 131. So I think using the technicals and then some math, I'm looking at it going, okay, I think there's a better opportunity in NVIDIA. Now, I think NVIDIA will continue to grow. I'll be hesitant November 21st when they report earnings, but I'm looking for better opportunities using my technical toolbox to do it. So, and right now, to me, NVIDIA is what I think today is the third day it's hit the 143 to 144 range. I don't know what it's at right now, but it just seems like it's hitting this ceiling.
Ron, in terms of the strategy on that spreadsheet, you're using a mixed bag.
I'm looking, yeah, I am.
Yeah.
It's cycle. Start with the cycle. Where are we at? What's going to inflate over time? Fundamentals and technicals. Yeah.
Right.
So, and I'm using really similar technicals as Mark preaches in the swing trading program, but just more longer term.
So I see the green line of death on NVIDIA is at 143.71.
Yeah.
I like Talon. I was in that for a little bit.
Yeah, I'm looking to be in it until I'm not in it, until there's a reason not to be in it. When I think we'll get into first, second quarter of next year, we'll see a cycle change similar to what we saw when in 22, money will become cheap, it'll become available, and we'll see a move towards expansion in technology, and you're going to have that opportunity. But in between here and there, I think you got a lot of stagflation environment. So I'm looking at sectors like I own gold.
I like
look
gold.
at it, silver, entertaining that idea. So it's more spread across, but I'm just looking to make money until it doesn't make money, if that makes sense.
Gold's been up 8 weeks in a row.
Yeah, and it's still, you got the BRICS meeting that went off this week, so that'll be interesting. And they're buying gold, so that's a big purchaser.
It's an easy one.
You got every central banks buying gold all over the world, China and Russia and everything. So
yeah,
what's that tell you about their faith in the economy?
Right. So
would you say 8 weeks in a row, Paul?
Yeah, I'm seeing if you put up a weekly on a 3 months, I see lots of weeks.
Yeah. It's just been on a run.
Yeah.
But at some point it'll come to an end.
Well, everything comes to an end.
Yeah, but until it does, so I put stop losses in that spreadsheet that I put on, and I'll adjust them every day or as I need to. But I'm looking just to hold this stuff until it doesn't work. So, and I know at some point we'll have a cycle change, and I'll roll out of gold, I'll roll out of some of these other things, and I'll go to other opportunities. But yeah, that's where I'm at. Yeah.
Yep. No, that's a good.
How about silver? How about silver?
Silver. What about silver?
Oh, SLV is the ETF. It's another metal that could be,
what people think about it. Some people think that hasn't gone up enough.
I think it's got more. I'm looking for an opportunity to enter it, and I haven't found it yet. So I'll wait until the technicals tell me, hey, this is setting up for a move. I'm looking, when you look at that chart and it goes like this, and it goes down like that, and then you see it go up, and you look at this chart and you go, God, I wish I got in right here versus where it is today. That's what I'm looking for. So I'm using the swing trading concepts, so I'm stretching it out over a longer period of time. So I'll look at the weekly, I'll look at the monthly and I'll break it down into the daily. But I also look at it from a cycle standpoint is why are we seeing a rotation into gold? Why are we seeing a rotation into silver? I'm looking at TLT again, and IEF, which are treasury bond indexes. I do think I think 10 years going to go to up close to 430, but at some point I think it's going to you're going to see that yield drop and those ETFs move. And I think you'll have another bond run, but I just don't, it's technically, it's not saying yes yet. So, but I try to put commentary in there throughout the week as well as what I'm thinking. So, but it's more, understand it's more of an intermediate to longer term perspective. So.
Thank you.
Yeah, absolutely.
Okay.
All right.
1:25 almost, so.
Yeah.
Don't want to run into Kerry's meeting.
No, I don't know.
That's all I got. Thanks guys for being a part of Platinum Channel and thanks for participating. It's a lot more fun when you guys have questions and comments and everything. I just enjoy this. I enjoy this day. So
yeah. Mark, I really appreciate you put in the income idea. That I think is really cool because we all need income.
That was very helpful.
It's something different. It's a little more risk. Well, it's riskier than a treasury bill, but it's something I do. Okay. So, and you don't have to do what I do because everyone's got different risk priorities. But for me, it's a little higher risk, but it's worth it for what I get out of it. You know?
Mark,
we all want a mailbox check.
Yeah.
It's going to be
it's all about booking the green, every month, and that's one way to do it. You can do it by a stock price going up, or you can do it by the distributions, or you can do it by both.
Yeah. What were you saying?
Yeah, I want to ask if we are going to have some information about the ETF strategy or something that you talked today, Mark, or something like that.
Are you gonna put together a concept like a?
No, for example, that we have the paper trade for stocks, like a swing trading strategy. If we are going to have something related with the ETF, or just what's the concept?
Oh, with what I said today?
Yes.
Oh, I just kind of came up with an example of if I bought them today at the price they were at 100 shares, that's what would have happened. Okay, so I would go back and, like Trent said, if you're interested in any of these, look into YieldMax and go into their website and understand what this concept is. Don't just blindly go in there and not know the risk of these products, and the cost of these products, and then utilize what we're teaching on swing trades to find a good entry point if you choose to get into it, and so you're not getting in at the high, and you can help yourself a little bit on the cost basis. And again, I just like it because they switched it around, and so every week now I have something to look forward to as far as some kind of distribution from these products, and instead of waiting monthly. So it's kind of and I'm looking more into income generation in retirement and building that up, and so that if you wanted to, you don't have to take the income. You can just dollar cost average it right back in, and buy more shares, and just build it up that way too.
Or build it up and so you could go buy a Ferrari with it.
I can't afford a Ferrari. Can't afford the oil changes.
Well, you just build it up so you can have it pay the payments on a Ferrari. I mean, that's one concept.
I haven't had a car. I haven't had a car payment since 1980, so I don't think I'm going to do that.
Right.
So,
all right, guys.
All right.
Alice, thank you so much.
Thank you so much, guys. Have a good day.
All right.
We'll see you at 3 o'clock, guys.
All right. See ya.
Take care.
Thank you, everyone. See you guys in a couple of hours, I think.
Bye.
All right.